Breaking news, guys. Tech stocks have continued to sell off, with Tesla having its largest ever decline of over 33% from its recent highs. The other tech stocks have also continued to sell off, such as Amazon, Facebook, Alphabet, Nvidia, and even Zoom, who do the video conferencing services. It seems many of these work from home names, which have had a major run up, are now facing a big pullback. But what has caused this correction, and could this be a great opportunity for you guys to buy on the dip? Well, in this video, I'm going to answer these questions and more. If you watched my previous video, I highlighted how to identify the buy points on many of these great stocks. It was a live stream, so you can check that out on the link below. But in this video, I'm going to go over 4 rational fears which could spur even more selling. In addition, I'm going to reveal Cathie Wood's latest trades for ARK Invest. Has she been buying more shares of Tesla on this dip? All will be revealed in this video. And if you appreciate more live updates like this, feel free to give the video a big thumbs up. That really helps out with the YouTube algorithm, which shows this video to more people. So with that being said, let's get into it. Rational fear number 1, and this is a red flag you should watch out for. You should watch out for stocks which don't increase upon great results. We saw this last week when some of the tech names produced earnings and they didn't see a major increase in their share price. To me, this says that the stocks are overvalued, and it's something you should watch out for. Rational fear number 2, this rotation is about a return to normality. During the health crisis, we saw many of these tech giants benefit massively from people staying at home. But with lockdowns being lifted across the globe, are some of these names now overvalued as people start to shop in more brick and mortar retail stores, go outside more, eat out in more restaurants, and even travel more? Money is an interesting thing in the capital markets. It's neither created nor destroyed, a little bit like energy. It's only converted from one place to another. So if tech stocks are selling off, where's the money going? Well, according to major analysts and traders, a lot of this money could potentially be going into cyclical stocks, which do very well during great economies. So what are some examples of cyclical stocks? Well, we have airlines, hotels, retail, restaurants, automakers, and I'm talking traditional automakers here, not Tesla. They all benefit from a booming economy, and these are the stocks as the smart money moves from tech into those stocks. And the third rational fear is the presidential contest. Now, even if you're from the UK, you should keep up to date with the US economy because it's the world's largest economy, and whoever's running that big juggernaut affects the world and the capital markets massively. And it turns out Biden is currently leading Trump as far as the polls are concerned.
To this election, but at this point, you're losing.
First of all, I'm not losing because those are fake polls. They were fake in 2016, and now they're even more fake.
However, the issue is Biden is not as business friendly as Trump, and he wants to roll back capital gains and corporate tax cuts which Trump introduced. This means lower earnings per share and lower net profit for you investors. And number 4 on my list is the major rational fear, which is the high valuations and large concentration of capital in tech. The tech giants make up around 25% of the S&P 500. This is incredible. The fact that those stocks move so high actually drags the entire S&P 500 up, despite the economy going through troubled times. To put things in perspective about how much these tech stocks have actually run up, it took Apple 42 years to reach $1 trillion in value. However, it took just 2 more years to get to $2 trillion. And even more stunning, all of Apple's second $1 trillion came in the past 21 weeks, while the global economy shrank faster than ever before. So how did Apple increase by another $1 trillion in just 21 weeks? Well, apart from a lot of the exuberance into these tech stocks, they also went and did a hell of a lot of buybacks. They did a stock split and they did some accounting trickery. So with Apple, their revenues and profits are not balanced with this current valuation. So I believe they will see a major correction. Although I do believe the company is a great business, the way they have inflated their stock price needs to be taken into account. Apple was just buying back their own shares to inflate the price. For example, if Berkshire Hathaway did this, they have over 120, $130 billion of cash on hand. And if they decided to buy back their shares, you'd see that share price effectively double. But they're not doing it because Berkshire Hathaway and Warren Buffett, they're more long-term investors. So they're not just trying to satisfy the short-term shareholder. Apple is trying to satisfy the short-term shareholder. Now, this is just something you guys need to be aware of, and that is why for me personally, I'm not purchasing any more shares of Apple at the moment and even during this crash. So apart from the exuberance behind these tech stocks, which occurred during lockdown, SoftBank Fund, which has been called the whale of the stock market, this is a $100 billion vision fund, which allegedly said that they would just be investing into startups, such as WeWork and many other of these sort of disruptive technology companies. However, kind of turned into a high frequency trading firm, and they bought $4 billion worth of the high-flying tech giants. And then they sold them off and made $4 billion in profit. Now, this whale making these big moves in the futures market does have a knock-on effect to the stock market. Traders will see this increasing volume, $4 billion flowing into these tech stocks, and they will trade with this volume. Imagine it's like the tide's coming in and the traders will all row with the tide, not against it. But when this company sold its futures options, it made $4 billion profit, and that could have been the straw which broke the camel's back. So what about ARK Invest? We all know Cathie Wood is a major Tesla bull, and she has to keep Tesla at 10% in her portfolio. Now, I did a video a few weeks back and I told everybody Cathie Wood was selling and she was taking some profits to keep her fund below 10%, as were many of the great hedge funds. And I did videos on this, which you guys can check out. Now, this was a word of warning for all you investors out there, because at the end of the day, I want the best thing for you guys. And my mission on this channel is to help as many of you guys become financially free through investing and trading. So I gave this warning to everybody. I said the major investment firms are selling off. Goldman Sachs was selling off. I said Cathie Wood was selling off. I said the technical analysis said Tesla was going to fall. And a lot of you guys, some of you listened, some of you said, Ben, thanks for that video, very informative. I've just rebalanced my portfolio. Some of you said, no, I'm ignoring it. It's no problem for me. I'm fine. And it's fair enough. I'm just giving you guys the facts, and then you guys can make your own decisions, because like I say on this channel, it's not financial advice. But let's say you did listen to those videos. You would have rebalanced your portfolio, cashed some profits at the same time the smart money was cashing their profits. But then when the dip happened, you could have got back in at a better price. And now that's exactly what Cathie Wood has done. So I just got these latest trades through for the 8th of September. And as you can see here, Cathie Wood has been selling some of the tech stocks. They sold Facebook, only small stakes for their rebalancing. They've bought shares in Nintendo, and they've been buying more shares in Tesla, as we can see here. So they've been buying a few shares in Tesla just to keep Tesla at 10% in their portfolio. So they've been buying more shares here in Tesla. They've been buying a few more shares in 2U. Apple, they've been selling. So maybe she's watched one of her previous videos on Apple's buybacks. And these firms aren't stupid. They know what these companies are doing. If Apple's just buying back shares to inflate its share price, these companies know. Apple's a great company, but it can still be overvalued. Tesla, another one there. So she's been buying shares of Tesla just to keep their position at 10%. And then another one here, all on the 8th of September. But the irony of all these trades is what I've been saying on my past 3 to 4 videos. Portfolio rebalancing is great because it forces you to sell high and buy low. Remember, all these profits in the stock market are only paper profits until you sell. So the idea really when you're rebalancing is to know what position do you want these certain stocks to take up in your portfolio. Like Cathie has Tesla taking up 10% of her portfolio. When it gets over, she sells, makes profits and diversifies her portfolio across multiple stocks. When it drops, she buys more and gets the stock at a better price. It makes sense. This also adds another warning to investors. For those of you which have just started investing in the past few months or during the market crash, this is a word of warning. Stocks don't only go up, even those in great companies. There is always a correction, there is always a pullback, no matter how great the company is. And usually, the bigger the run up, the bigger the pullback. That's why Tesla's seen the largest pullback so far. So here we go, I've got the technical charts up for Tesla. I went over this in my previous video just to show you guys. We'll see how my predictions have been so far. So from the Fibonacci retracement, it put a support line at around 330. And that is roughly where we're seeing the price right now at 330, down minus 21%. I did say to you guys previously, that is actually not a bad time to get in there. If you missed out on Tesla and you want just a small stake, it's not a bad time. But the stock still does have a high valuation even at these levels. Because remember, this is post-stock split. So 330 times 5, remember, prior to the stock split, that's still $1,650 per share prior to the stock split. Now, if you remember looking at the stock price then and saying $1,650 a share for Tesla, that's a lot. Then it's still that price now, even with this 30% correction. However, we are in a new market. The stock split has happened. It may entice more retail investors. So if you want a chance to get into Tesla, this could be an opportunity for you guys. It has broke through this Fibonacci line here. My next resistant line is at $320 per share. So there's not a massive amount in it if you're buying a small stake. So that's a $10 difference in price. If you're buying a big position, then it's worth waiting for it to drop more. If you just want a small position, now could be a good time to get in there, just as Cathie has done. On the MACD, we can see the signal and the moving average has crossed over. And basically, when a crossover occurs, that means a trend reversal is likely. So at the top here, we had a crossover on the overbought, and then there was a sell-off. So it's been fairly accurate on the past few runs of Tesla. Here, for example, there was a little bit of a crossover, and then it shot up. And these are just technical indicators. So another crossover here. The stock has broken through slightly through this line, but 330. So that's just a brief overview of Tesla. For the other stocks and more on Tesla's buy points, check out my previous video. For reasons why Tesla wasn't included into the S&P 500, check out my video on that. So who can't wait for the market to open? If you guys are in the UK, just to let you know, the market opens in New York, I believe at 9:30 a.m. in Eastern Time, which is around 2:30 p.m. in the UK. The market closes in the UK at 9 p.m., which is around 4 o'clock in New York Eastern Time. That's just to give everyone an update there. So what do you guys think of the tech sell-off? What do you think of Tesla's largest decline in history? Let me know in the comments below. Let me know if you're buying the dip. Let me know if you're investing into cyclical stocks. I want to hear all your thoughts below. And if you want more of these live update videos, let me know in the comments and I'll do more of these off-the-cuff updates. If you appreciate valuable content like this, feel free to give this video a big thumbs up. That really helps out with the YouTube algorithm and I appreciate it a lot. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I will see you guys in the next video. Invest safe.